What exactly are tax credits and how are they different from deductions?
Tax credits are a dollar for dollar credit against your tax liability. So they are literally for most people, for high income taxpayers that are in the 37% bracket, uh, a, a $1 tax credit is worth about a $3 deduction because you get a deduction. Say if you spend $3, you multiply your tax rate by that 37% to get the tax benefit of that deduction. So about a dollar. So, but a tax credit is, a dollar tax credit is just like literally somebody paying your taxes for you. It's a dollar off the amount of tax you owe.
Mm. Thank you for that explanation. So why do so many small business owners miss out on valuable tax credits each year? What's the reason?
Well, I'd say the most common one is the EV vehicle credit. Now that's going away, but what we did in the years past is there was two kinds of EV vehicle credits. One, the most common one that you heard about in the popular press all the time was $7,500. If you buy an EV vehicle, you don't need to own a business or anything. You just get $7,500. But it phased out after 300,000. So a lot of business owners didn't get that credit, or high income earners didn't get that credit. So, but if you're a business owner, you could take this other credit called the commercial clean vehicle credit. It's a whole different code section. It just happens to be $7,500 also. But so we would structure it so that the business buys that vehicle, and there is no phase out on income limit for this one. There's also not the same phase out limits for like where the batteries were sourced from and stuff like that. So this was a much better credit. So a business could buy the car and you wouldn't have to be phased out for income. So that's probably the most common one I see where people don't get the credit because they just don't know, but there's this other credit that doesn't phase out on income. And then, credits don't come up that often in the planning, but that's the one place where they do. All the other credits with like child tax credits, because stuff like that, there's not like a ton of planning opportunities around those actually.
Mhm. Can you explain the R&D credit and who actually qualifies for it?
It doesn't come up that often for us, but when it does, here's how it has worked. If a company has its employees working on research and development, you have to go through this, then you can get a credit related to, it comes out to about 20% of their spend on those items. But there's a whole complicated way you calculate that. And then you also have to qualify that those costs qualify. And we actually outsource that. But the firms that do that, they have to go through, is it novel? You can't just do R&D spend on something that you could have just bought off the shelf. Uh, anyway, there's a process they go through. Is it novel? And then there's several other qualifications to qualify for the R&D credit.